So to start off with, there are a few key reasons that we are focusing on as to why we believe that equities will really be attractive this year. So the key one, and what we've seen particularly becoming a market mover in the last couple of weeks, is really post the rate cut, which was enacted by the central bank, which is a 25 basis points reduction. While that reduction is quite minimal, it was just the fact that it was not necessarily expected by the market, and we've seen markets actually move up by about 1,000 basis points since this rate cut, and actually about less than just about 3,000 basis points, 3,000 index points since the bottom that it hit in April. So lower rates is one key driver. And we're also seeing the fact that corporate earnings that have been published with the earnings season, which just ended, has been very strong. We've seen about a 52% overall year-on-year increase in earnings on an overall basis. And this is very strong and much more fundamentally driven this time around, with revenue increases really contributing in terms of the overall bottom line increases that companies have posted as well. And the third point is really the fact that there's a lot of noise and there's a lot of questions around the global risk factor and whether that can really impede the growth that we would be expecting in terms of the equity markets in general. But our view is that Sri Lanka is quite resilient to these global and external volatilities, and we'll talk through the reasons why we believe so as well.